6,000 options contracts on Unity software today, May 10, when they report earnings after hours. What do they mean? In this video, we're going to analyze this together. So let's get right to it. 32 strike calls. Definitely open orders because it's greater than the open interest. So what happened? You'll see here on the options chain, this was done 30 minutes ago around 12:11, these 32 strike calls. There was also May 26, also different dates as well, but they're targeting this 32 strike calls here, and that's very unusual. And also a lot of them were being executed at the ask price, and so here we are. Earnings today. Could Unity break 32 for earnings? Let's zoom out a little to take a look at Unity. Ticker symbol U. Well, it does look like it is near a low, and you'll see here at the beginning of the year, this is where it has been trading, this range where we currently are. And so there is that potential. That 32 is right here. It was the previous high just recently before it started a downtrend back in April 5. So these calls at 32 are implying that we will break that level. And so our trade for this is slightly different. The way we are going to be trading this is, instead of buying those 32 strike calls, we are selling it because of the high volatility you'll see here. It's just 2 days away. So we prefer to sell volatility right before earnings. And so what we did is we sold this 32 strike calls, and then we bought the June 16th, 37 days ago, we bought the 30 strike calls. You'll see our position here as well. So it is a diagonal bullish strategy, and you'll see that here. Let's put the other one with just the calls. If you were to just buy the calls, it is less expensive at about 100, currently going for $107. And so that's what it looks like. So these unusual options at the 32 strike, it has to break this, actually has to break $33 by expiration because of the cost that you're paying initially, and also the theta decay. You'll see here very strong high theta decay at -46. This is why we did not want to take on that risk. If Unity doesn't go anywhere above this area here, at least above this break even, this is for May 12. Let's say tomorrow, May 11, it has to break that level. But you also have to keep in mind, because this trade is a positive Vega, there could be some loss there from Vega, because Vega will decrease, and a positive Vega trade will be at a disadvantage. And so there's multiple types of risk associated with just buying a call. However, the main benefit is that it is low cost at just $100. However, our trade is slightly more. It's not as much more. It's $150. Let's open up that lock. $149. And what it does is that if you look at the Greeks on this trade, you'll actually have a positive theta, right? And so this positive theta will counteract that positive Vega that is going to be unfavorable. but the theta can catch up to it. As you'll see here, as we have those 2 days, very high theta will bring that purple line up to become more profitable to the blue line, and we want this curve to go up as high as possible, because the zero line here on the y-axis is the profit. The higher it goes, the more profits you get, and the lower this goes, it is a loss. So if we can get that purple line up with that theta, then that's very good for our trade, and that's what we're using theta to do, that because we're selling those that option, that 32 strike call, to get that high amount of theta. And then we have also not a very strong theta decay, because the call we're buying in June is farther out, so the theta is much smaller. Okay, and so our trade will also profit as the price goes up on the x-axis. You'll see here currently Unity is at 28, and so as it goes up, it will be profitable, and then we will be able to wait the 2 days for expiration to collect the max profit, which will be at here. If it does go down, we will still be able to cut our losses, and our break even is actually over here. You'll see here at 26.5. So the price can drop from 28 to 26 and we will not be at a loss. So that's also why we like our trade. Whereas the unusual option, you're at a loss if it drops. The break even is far from this. There is no break even to the downside. So we like how our trade has this risk reduction here, and we usually like to have risk reduction for our earnings trades, because anything can happen for earnings, and it can always be a surprise, or things could turn out well, but the price still drops, or we can have bad news and it's still good news for the stock price. So very unpredictable, but so we want to hedge our earnings trades. All right, so let us know what you think in the comments below, what you think Unity will happen for earnings. And please subscribe, hit the bell icon. You'll be notified whenever we see unusual options. And please smash that like button. Helps us continue to make more videos to share these insights with everyone. Thank you and take care.